Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, before we start, Phil, a shout out to Stephen Whitten because his weather forecast turned out to be spot on, didn't it?
It did, yeah. I'm not sure what it's going to be like for this week, but yeah.
No, we should have him on every week. Actually, it's just do a forecast because he got the heat wave. He got the heat wave right, didn't he?
He did,
he called
yeah.
it correctly. Yeah.
So if you are listening, just send us your forecast for next week, Stephen. And let's see, let's get you on a regular slot. What can we call it? We should call it something else, shouldn't we? Get him on
Whitten's weather.
Whitten's weather. There you go. The journalist in you comes out there, Curtis. It's it's been we've had some great weather. So whether you had anything involvement with that or not, Stephen, thank you. We've had a great little spell of weather. So we've had a little bit of a busy week this week. Quite a few headlines to get through this week. But yeah, we've to start off with our first shout out, and this is the inaugural the Barbara Cox Women of the Year award that we've mentioned recently. Just so when we give a shout out to get your nominations in, the finalists or the nominations have now been shortlisted. So like I say, this is the Women of the Year Award 2024, and this is following 6 inspiring women were selected by the panel of judges, including previous winners Sarah Sloman and Lorna McTeer. And we'll go through the list very quickly for you here.
Yeah, it's a really strong shortlist, isn't it, Phil? So starting with Marta Blaquez, president of Facon Auto.
And then you've got Jackie Barker, who is the strategy director at Keyloop.
Jade Booten, head of marketing and online at Fords of Winsford.
And then you've got Lucy Line, who is the deputy managing director at Navuna Vehicle Solutions.
And Sally Foote, Chief Commercial Officer of Sell My Car and CarWow.
And finally, you've got Lisa Spong, who's the Sales Director at Reflex Vehicle Hire. So, as Curtis said there, fantastic, strong lineup of shortlisted nominations there, and we wish everybody the best of luck. It's a fantastic award to win, and the winner will be announced on the 5th of June. And as I said there, the winner will receive, not including the award, but also £5,000 to spend on her personal development.
And final shout out for this week, we will have our regular monthly catch up with Darren Martin. That's coming up in a couple of weeks' time. So we'll give you more details as and when on that. But May's going to be an interesting month to look back on. So we look forward to catching up with Darren for that.
That was definitely one that people will need to be listening to at the minute, the way the market is playing out, Curtis.
Yeah, because we've got one or two stories this week on the used car sector, haven't we? It's definitely the hot topic at the moment.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM, Car Dealer, Motor Trader, the FT and the Guardian, starting with Sytner to axe CarShop used car supermarket name, rebrand some stores and sell others in huge shake-up. Used car market could reach 7.7 million units, says Cox Automotive. Vertu Motors reports mixed profit results on record revenue figure of nearly £5 billion. Marshall appoints 2 group managing directors. Vauxhall owner to sell cheap EVs in UK and mainland Europe. BYD targets overtaking Tesla as top electric vehicle seller in Europe by 2030.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Well, Phil, as we record this, the big story of the week was reported on Wednesday by Car Dealer, and the headline there is Sytner to axe CarShop used car supermarket name, rebrand some stores and sell others in huge shake-up. So the headline does kind of tell the story, because this is a pretty mega story, isn't it, Phil?
It is, yeah. And I mean, it follows a few of these in terms of these, particularly around the supermarket sector. Yeah, I mean, it's a big shift for the group, particularly, following, obviously, if you remember the days where you had the car people and you had CarShop. That was then combined and came obviously under the CarShop name, and then you've got your supermarkets and what happened there. But again, I think this kind of reflects a significant sort of strategic move and review of the business and how they're going to operate going forward. Now, I suppose the question with this is how much is this down to vehicle supply in the market that we find ourselves in at the minute?
Yeah, definitely. So the story as it stands, and the Car Dealer coverage, it's all confirmed by Sytner. So just to rewind slightly, Sytner bought CarShop back in 2017 for more than £70 million. And in fact, in 2021, it rolled out the CarShop brand across its other global markets. Sytner, of course, being massive in North America. So currently there's 11 CarShop sites and one Sytner Select store, which is actually in Wakefield. And the story, it's what looks as though the plan is to keep most of the existing 11 CarShop outlets, but rebrand them as Sytner Select approved used cars and sell the remaining ones to an unnamed interested party. So that in itself is a story, because who is out there with the firepower to buy supermarkets or indeed outlets for refranchising? So I'm sure we'll hear more of that in due course. But this, of course, follows the demise of Cazoo as an online used car retailer, Lithia closing its Pendragon car store outlets, and Peter Vardy closing its Cars supermarkets last year. And that all goes back to this all being victims of limited car supply following that post-COVID shortage of 3 to 4 year old cars.
Yeah, and the Steve Young, who you'll know from our regular catch-up on the podcast, who's the managing director of ICDP, said that CarShop was effectively the last man standing. That's a bold statement there, Steve.
It is, isn't it? Yeah.
So he did have a conversation with Car Dealer and said that he thinks there is a common thread, and that these standalone stores are relatively high fixed cost and succeed or fail on the back of their used car business, whereas a traditional franchise dealer point has new, used and after sales, so has some natural risk hedging built in. So again, I think the point there is to what you alluded to before around sort of Peter Vardy's and Lithia and etc. That these supermarkets purely rely on supply of used vehicles. That's their balance sheet. That's their revenue. And without that, when volume of vehicles does become challenging or supply chains start to contrast, then that's where they get hit pretty hard. And can't really operate at what their core is, which is volume of used cars. However they operate in terms of margin wise, volume throughput of used cars. So I think Steve is making a very clear point there, and he does highlight it, saying that the dip in the 3 to 4 year old used cars now working through from the COVID times, the availability of these are now restricted. So again, talking about that impact of the shortage of supply, particularly into the fleet and leasing sector through the pandemic, when production was significantly hit, that is having that knock-on effect now in the 3 to 4 year old vehicle market.
Yeah, and it really does highlight the challenges facing franchise dealers of running their own multi-brand used car supermarkets because, yeah, I think Steve's got a point that this is very much a sort of last man standing. But of course, we do have the independent car supermarkets with a national presence, the likes of Motorpoint, Big Motoring World, and Trade Centre, which operates across Wales and England. So this is really shining the light, isn't it, on the car supermarket sector and that lack of cars.
I suppose the question with some of this is, they've got other things within their business portfolio that they can focus on, that they can invest in and secure. And I think there's a comment in here that it is all about security of the business, security of their employees, and they have to do the best for that. So maybe when you start looking at some of these franchise operators that moved into that supermarket space significantly, maybe it is a case of reverting back to their core business, and let the likes of you referred to there with Trade Centre and Motorpoint and others focus as the supermarkets, and they get back to their core as franchise retailers. So I think in time we'll see how this plays out, what happens to each individual of those 11 locations, which do they keep, which they sell off, and more importantly, Curtis, who's the buyer? Who's the unnamed buyer that is looking at some of these sites is going to be the key.
Yeah. Should we speculate, Phil?
No, we better not. Comes from anywhere. It could be UK based, could be America's still got a lot of money to spend in the UK. And there's operators from Saudi Arabia now looking at significantly at the UK market for growth. So yeah, it could be anyone.
Yeah. Stay tuned. We'll bring you an update as soon as we know. And staying with the used car market, turning to Motor Trader, the headline there is used car market could reach 7.7 million sales, says Cox Automotive. So this is some forecasting, or rather reforecasting, that you and the team have done at Cox Automotive, isn't it, Phil?
Yeah, I mean, we do it on a regular basis, and we've recently launched our Insight Quarterly, which gives us the opportunity to review the market as it is on a quarterly basis, and part of that is the new and used vehicle forecast. Now, obviously, we saw a slight uplift in Q1 when we got the results for the used vehicle transactions, still behind pre-pandemic levels, but optimistically, it was still a marginal increase year on year for the first quarter. So we felt that it was right to reflect that in our forecast. So we have marginally lifted our upside forecast. So our forecast of 7.7 million is the positive upside. That's all things going our way, and that's based on economic recovery, potential base rate decrease as we get towards that second half of the year. We know there's a lot of activity in the new vehicle market. There's a lot of products landing and a lot of push going into the new car market, which does trigger used cars. It triggers used cars coming off fleet and contracts into the used vehicle market. So we've got we air of optimism that we're seeing a marginal, albeit slow, recovery to the used vehicle transactional market. We're not forecasting the 8 million yet, or the 8.3 million that we've achieved previously. But I think optimistically, if we can get towards that 7.7, even 7.5 million this year, then that will be a positive result in terms of that recovery period.
And this follows the SMMT reporting its Q1 figures, doesn't it? Because I think that was 1.96 million in the first quarter, which was certainly the strongest start to the year since those pre-pandemic times.
Yeah, it is. I mean, again, not quite, as strong as we've seen previously for a first quarter, but it's still an optimistic recovery. I think what is clear is reports that margins are challenging at the minute, compared to what we achieved last year and the year before. But the volume's there. I mean, you look at 1.96 million, we did 1.8 in 2023, 1.7 in 2022. You'd have to go back to 2019 where we achieved over 2 million in the first quarter. But the average between 2001 and 2019 is only 1.87 million. So we are 4.8% above the pre-pandemic averages. So we are reflecting that's a positive recovery to the year.
So moving on, next headline is with car dealer, and it is Vertu Motors reports mixed profit results on record revenue figure of nearly £5 billion. A bit of a long headline, that one.
They got everything in there, didn't they?
Yeah. So this was reported on Wednesday this week. So Vertu Motors saw its pre-tax profit rise last year. Its year end is to the end of February on record revenues, although its adjusted profit before tax was down. So in announcing the results, Vertu Motors said pre-tax profit went up by 6.5% to £34.6 million on revenue that rose by 17.6% to just shy of £5 billion. But however, the listed group said its adjusted profit before tax fell by 3.8% to £37.8 million, with the group blaming the effect of declining used car vehicle values during 2023's last quarter. So very much sort of touching on what you were saying there about that margin erosion in used cars, and also the resulting impact on used car margins. So as well as gross profits generation.
Yeah, and it does. I mean, he alludes there to the volume of used cars, and it's shifted. I'm not sure if that's a good terminology. Sold, shifted, moved, whatever. Just over 86,437. Interestingly, that's up 4.7% for the period, and 101,300 new vehicles, which was a rise of 17.8% over that same period, and saying that agency new retail cars totaled 1,585 versus the 80 the previous year. So some good growth there in terms of volume of both new and used vehicles. And it does also highlight the after sales revenue was up 8.6% at 418 million, with a gross profit rising by 7.7% to 185 million, which the group said was the delighted about. So some positive, optimistic performance there from Robert in their financials, albeit with an air of caution to what to expect for the for 2024 and the year ahead.
Yeah, and Robert Forrester goes on to say used vehicle prices and margins have now stabilised, and there has been strong cash generation from lower working capital, reducing net debt below market expectations. And he goes on to say during the year, record revenues of £4.72 billion were achieved. But he also looks forward a bit. So moving to the new financial year, March and April were successful months. The group delivered new retail like-for-like sales volumes ahead of the market decline in both March and April. This demonstrates the robustness and strengths of the group's operations.
Yeah, it's again, just finally there, it does say that the group's performance is, as always, the result of commitment and hard work of all colleagues, and that they like to thank all the team for their continued effort and dedication. And then there's finally the share buyback approval for the potential purchase of shares for up to 3 million has been put in place for the new financial year. So again, still some very optimistic performances there from Vertu and going forward. And hopefully we'll get Robert on the podcast soon and talk about it in a little bit more detail, but more importantly, get his view on what's happening in the market and where he sees the next year or two going forward.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
So next story is from Motor Trader, but we were scratching our heads a little over this one, weren't we, Phil, before we started recording, because it was announced during the week that Marshall Motor Group had appointed a new group managing director. But because the stories were picked up in different publications or websites, it didn't actually say that there were two group managing directors. So we can reveal that Marshall Motor Group has appointed two new managing directors. So starting with Mark Robinson, who will be a familiar name to many listeners of the show. So Mark Robinson has been working on an interim basis, I think, for the last 4 months as a Group MD of Marshall, and that position has now been confirmed, and he has been appointed as full-time Group Managing Director, along with Trevor Fussy, who we'll talk about in a moment. But as I say, Mark, familiar to a lot of listeners, his background in the industry is fascinating, because he started in the mid-1990s with Sandy Cliff as Group Operations Director. He moved to Pendragon as multi-market leader and then Director of Lookers. And that was before he founded Vantage Motor Group in 2003. I can't believe it's that long ago.
I know,
That's scary, isn't it? So that's 20 plus years ago now. And he ran that until 2020. And we reported about this on the podcast because the group was sold to the management team. And after that, more recently, he's been managing director of Pure Motor Retail. So, I mean, this is a great move for Mark, and it's good to have someone of his background, his extremely detailed knowledge of senior level franchise dealer group management at the helm of Marshall Motor Group.
Yeah, as you say there, I mean, I'd seen sort of that Mark was at one point advertising for a permanent position as the group managing director, whilst he held that interim role. And then, as you say, this week he brought that he'd changed his profile on LinkedIn to say that he'd now been appointed permanently as the group managing director. And then, like you say, we got a little bit confused with the other one. But there's more to come on that one. I think fantastic news there. And they say just on Mark's background and fascinating and great foundations of a background there into it. I mean, he's a great operator in the sector and a nice person to go along with it. They're all into you, Curtis.
Yeah, no, absolutely. I've certainly spoken to Mark many times over the years, so wish him well. Do you want to talk about the next?
We can do, yeah. So, again, following on from that, in Car Dealer, they ran the story that Marshall makes Trevor Fussy Group Managing Director in second major appointment from Pendragon. And that's that Trevor Fussy has moved from Pendragon to Marshall's. He's been appointed as Marshall's Group Managing Director, obviously now alongside Mark Robinson. And he joins CEO Martin Casher, who was also ex-Pendragon, as the COO. And obviously that is now, he's been with Trevor, he's been with Pendragon for 22 years. So he's been followed in the footsteps of Martin Casher, who quit as Pendragon's Chief Operating Officer in July of last year, after 40% of the Pendragon shareholders voted against his appointment to the board. Cashel became CEO of Marshalls in November of last year. So again, fascinating appointment there of Trevor joining the Marshalls business. That you say he's spent the past 7 years as MD of Pendragon's Stratstone side of the business, and before that he was Stratstone's national franchise director for BMW and Mini for more than 10 years.
Yeah, and it's probably just worth adding that this position has been vacant really since Dash Gupta left the business, hasn't it?
It has, yeah, and we've caught up with both Curtis and I have had little chats with Dash, so a little shout out to you, Dash. But yeah, we'll hopefully get a chat with Dash at some point, probably. Still got his connections within the sector. I'm sure we could ask his view on these recent appointments of Marshalls.
Yeah, and I notice he does keep tabs on the automotive sector because he's still very active on LinkedIn, and he does comment quite a bit about things that are happening in the industry and various posts. So he's keeping in touch, isn't he?
Yeah. So moving on to the Guardian now, and this is a fascinating story. So Vauxhall owner to sell cheap Chinese EVs in UK and mainland Europe, and this is Stellantis deal with Leap Motor aims to cash in on imports as Biden imposes 100% tariff in the US. Now, this might come confusing because if you see output from Stellantis, they're very much against Chinese brands entering the UK and Europe, supporting tariffs on Chinese brands, but also alongside that, they are part owners of Leap Motor, which is a Chinese manufacturer. So, yeah, fascinating, this one, Curtis.
Yeah, it's a curious one, isn't it? So, as you say, it's a joint venture with Leap Motor, who are a well-established Chinese brand, and of course there'll be another new name for the UK. But the story says that models will start to be sold from September at prices of less than €20,000, so that's £17,200, with UK sales due to start in March 2025. So this is really looking forward to plans for next year. And I think I read elsewhere that this will actually cover 9 European markets, including the UK. And Carlos Tavares, the Stellantis chief exec, said the move would allow it to profit from the wave of Chinese cars coming to Europe, and strongly decried protectionism as the US launched steep tariffs to shield its own industry. But as you said, Phil, I didn't think Carlos Tavares was a big fan of Chinese imports coming into Europe. But this is a way of, I guess, controlling what comes in and what's being sold. And these will be sold through Stellantis dealerships. They will get the first dibs on selling Leap Motor, and that's of course across Peugeot, Citroën, Vauxhall, Alfa, Fiat. Yeah. I mean, we're talking about a number of major brands there.
Yeah, no, and as you say there, he's always been fairly vocal, and particularly in Europe, because he was one of the more vocal ones of wanting to impose tariffs on Chinese vehicles entering the European market. But at the same time, he's obviously got investment in trying to establish themselves in China as a Stellantis brand, not just obviously the joint venture with Leap Motors. So again, capitalising on where the market is heading, that entry point. I think anything in terms of the support towards the ZEV mandate and the challenges facing the ZEV mandate, particularly for 2024 and 2025, because you go from 22% this year up to 28% for cars next year. Anything like this does help that transition, because it creates that lower entry point, particularly for the private customer, looking to get into the EV sector. So again, European and US car makers are saying here that they're scrabbling to catch up with the China's host of EV makers, and say that which often benefit from direct government support, cheaper labour costs, and China's dominance of the global battery supply chains. And as you say there, that Tavares portrayed the deal with Leap Motors, which is likely to increase China's surging battery electric vehicle sales, as a pragmatic and opportunistic move to profit from the rise of Chinese manufacturers. So really jumping on the back of it there.
Yeah, there's a lovely follow-on quote where he says, "Whether I like it or not, they are grabbing share. What I can do is leverage that dynamic." So, he's making no bones about it. He can see these cars coming in, and he wants a bit of the action and to be able to control some of it as well.
Yeah, so I think we'll keep an eye on this one, but that is a fascinating story then. I mean, as always, this will be in your newsletter feed on Monday morning, so I would urge you, there's a little bit more detail in this story. I would urge you to take a look at that story and check it out when we share that with you.
And final story this week comes from the Financial Times, and the headline is BYD targets overtaking Tesla as top electric vehicle seller in Europe by 2030. So this is another story that's actually emerged from the FT's Future of the Car conference that took place last week, and it does follow on neatly from our previous story. It's again, Phil, it's almost as though we plan these.
Yeah. So
BYD aims to topple Volkswagen, Tesla, and indeed Stellantis to become the largest electric vehicle seller in Europe by the end of this decade. So European President Michael Schulz said the Chinese car maker planned a huge investment in factories, dealers, and marketing in the region to convince motorists to buy its electric and hybrid vehicles. And we're already starting to see that, aren't we? Because BYD, it's establishing itself in the UK. We're starting to see its sales building, and certainly there's some of the marketing that it's putting behind it. But these are pretty bold ambitions, aren't they?
They are, yeah. And well, like you say, just on the back of the previous story there, I mean, there's a lot coming in terms of those more better value EVs into the marketplace. And we've spoken previously about the BYD Seagull, which is available in China for less than $10,000. But they're now saying that European version of the model should cost less than €20,000 when it does start to enter the market in Europe. So again, really going very much head to head with the Leap Motor story previously there from Carlos.
That's very much the sweet spot, isn't it? Getting cars in under €20,000, and the Chinese are very well positioned to do that.
Yeah, and I think they're going after that volume. We know that both Tesla and BYD missed their Q1 objectives. They're obviously trying to bring that back now. They're really going for that volume and that throughput of vehicles. And you only need to look in the UK of some of the dealer groups, particularly BYD, are now starting to partner with and where they're emerging, and their significant growth investment across the European market as well. We spoke about them a couple of times, haven't we, Curtis, with their factory now in Hungary, alongside the coach company they've got over there for cars. So it's a lot happening within BYD. So they're certainly going for it globally at the minute. And I think they did cite in a story I did see that the US is kind of there, but it's on a back burner. I think they've got a lot more focus with the UK and Europe in the meantime before they tackle the US and the Biden challenges that faces the Chinese brands over in the US there. But I'm sure they've not forgotten about the US market.
No, definitely not. And the key to this achieving this target is to build more and more cars in Europe. And Michael Schue says this is all about making cars in Europe for Europe. And he goes on to say to ship cars from China to Europe is not going to be long term. The long term is to produce locally. So that's a pretty clear target there, pretty clear statement.
Yeah, and just whilst we're on the FT, we need to wish Peter Campbell all the best. He's moving roles within the Financial Times. Most stories we cover on the automotive sector is from Peter, but he announced at the Future of the Car that he's now moving within Financial Times. I think he's going into politics. So sadly we're losing Peter, but his replacement is due to start in the next month or two.
Peter's done an absolutely brilliant job covering automotive for the last several plus years, I guess. Good luck to him there.
Yeah, definitely. But that's it for this week. So as I say, some big stories there and some big news that we've covered this week. So as always, we'll include the links to the stories in the newsletter that go out on Monday morning through the usual LinkedIn feed. So keep your eye on that one. But yeah, never a dull moment, and a bit of a confusion for us there, Curtis, with two group managing directors for Marshalls. But hey, yes. We'll dig into that story a little bit more in the future, I suspect.
Yeah, never a dull moment and never a quiet week. But that really is all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.